All right, welcome back YouTube to another eval to payout. This is episode 2. It is Monday, the 27th of July, 2026. And yeah, we didn't take any trades today. So I'm just going to get straight into it. I'm going to talk about my analysis going into the day. Obviously, we have new week opening gap, so that plays a big part. And then we're going to go into like the trades I, looked at and could have potentially taken, etc. So onto the 4 hour is where we usually start. I'm literally just looking at two things. I'm looking at the bearish fair value gap above where price currently was, and then the bearish fair value gap below. So if I actually go back to around where market open was, so let's go to 9 a.m. Yeah, 9 a.m. you can see we have the bearish fair value gap above price and then also below. And my kind of takeaway from that is I'm definitely bearish, right? We'll talk about that in a minute because of the new week opening gap. We're always going to be bearish today. However, on the 30-minute, we do have this, and also on the 15 as well, but we do have this 30-minute bearish fair value gap that price is kind of trading below that consequent encroachment. So until we kind of see the buyers shift, for example, we start trading above this consequent encroachment, therefore inversing this bearish FVG, then we start looking at that 4 hour above. But at the time, I highly doubt that would have happened, especially with the massive draws below. On the 1 hour, I didn't actually mark anything out really. I just marked out the fair value gap within that new week opening gap. But yeah, down to the 15-minute, I've marked out the London high above. We've also got some buy side liquidity sitting above that. We have obviously that same 30-minute fair value gap just marked out on the 15. Just watching the way price reacts to this. We also have Asia low. If I turn on sessions indicator, you can see this is Asia low. So we're going to be looking to potentially take trades down to Asia low. Then obviously we have our new week opening gap. So the new week opening is the opening on Sunday and the close on Friday. You can do this from anything from the 1 minute to the 15-minute. And we've marked it out here on all time frames. You can see if I go back to the 1 minute, you'll see that it's also marked out on the 1 minute. So yeah, so like I said, definitely bearish. We've got Asia low also looking and working as protected lows as well. Those are the targets for the day, but mainly I want to catch some shorts on the way down to New York Open. Not New York Open, new week opening gap and the imbalances within it. And then right at the bottom, let me go into the 1 minute time frame real quick. You can see we have, actually not the 1 minute. You have New York low just sitting below the new week opening gap. So that's that. I'm going to come off of replay now and just show you what happened at market open. So as you can see, market opened literally right here. We're going to put like a horizontal line just so you guys can see. Actually, no, I'm not. Right here, you can see the 930 candle there. So initially, we just start trading lower as expected, and we actually sweep Asia low. Before I actually get into that, I want to talk about a 3 minute. There was actually a good 3 minute entry that I didn't actually find. I didn't spot this at the time. I was doing my analysis for market open. I don't really like taking pre-market setups anyway, but we did have a pretty good one. We had these protected highs, really nice sweep, and a nice inverse. To be honest, going by my rules, this probably would have been break even, right? Because we put our stop loss there and we go break even probably at this open here. So it probably would have been break even for me. And we can literally ride that all the way to the consequent encroachment of the new week opening gap. And that would have been a really, really nice trade to start the day. That would have been incredible. I would have been one and done. But realistically, I mean, maybe if I saw this in lifetime, I would have taken it, but I just didn't. I was doing my analysis. So maybe I need to, start looking at more pre-market entries and stuff like that. But yeah, this was really good. Like really good. We, in the premium, I believe still reacting to that 30-minute fair value gap, that bearish fair value gap. And then obviously the targets below are just endless. So honestly, really, really good trade. It's unfortunate we didn't catch that one, but that's okay. So yeah, going to the 1 minute, market opened, and obviously we get that nice 930 wick that we usually get, and we traded low and took protected lows and Asia lows. We also tapped into the new week opening gap. We then got a really nice kind of, let me delete this for now. We got a really nice just re-inverse. We usually get these off market open. These are like one of my favorite entries setups to take, is just straight after market open. When we induce buy side or sell side, we kind of take the trade in the other direction up to those 930 highs. Of course, I did not take this just because, I mean, look at the close. We closed basically right next to the 930 highs, so it just wasn't a trade that I can take really. Just didn't, the RR didn't really work. Potentially would have been a decent trade on the 30-second, but again, I don't trade the 30-second. And then something really strange happened. So obviously we swept these highs here, and then we kind of just reversed. So we tapped into this fair value gap. That's already been tapped into, and we just left the 930 highs above. That's how I knew we were incredibly bearish for the day. So just looking at that, seeing that we didn't even need to go up and take the 930 highs to kind of fuel the move lower. That's how I know how bearish we were today. We then got this setup here, which I tape read. I didn't actually take this trade, so you can kind of say I paper traded it. So just this here again. Unfortunately, just didn't get the nicest close. RR for me just would not have been good enough. Would have been like a 1-to-1. And with the fact that we left 930 highs above, it's one of those trades that I'm just not ever going to take. I'm not going to go outside my rules to take something, because I know when I lose a trade like that, my head would just be gone. You know, I'd rather just protect my mental, because especially a trade like this, the RR is not the best. This actually would have been break even, potentially, depending on where we got stopped in, entered. Because we'd go break even at these lows here, and then got a stop to break even, then we probably would have traded back up to the entry point. So, but yeah, leaving 930 high or 930 wick above is just really, really not ideal. We really got a poor inverse candle as well. So that's that. And then we had like a long setup that I saw on Dodgy's Discord. A couple people were looking at, but again, this isn't a good trade just because of how bearish we are. We've seen incredibly bearish signals since market open. We're even leaving really, really high pools of liquidity above, you know, inversing in bearish directions, etc. And obviously with the new week opening gap slightly filled, you can see us still moving into it, and I expect the whole thing to be filled, which it eventually does, and that usually happens. So that just comes from experience. But yeah, we had this 1 minute inverse. I mean, it looked nicer on the 2 minute in my opinion. Small little short-term liquidity sweep, and then inverse. We didn't get the best inverse candle. The momentum looked like it was there. Like, it did look like it was there, but it just, I don't know, man. It just, we inversed it and kept moving down. When you're so bearish, don't even bother looking at any bullish setups, because yeah, it might look nice. This doesn't even look that great either, but even if it is A+, but you're very bearish, then it is an A+, right? You can call that a B+, because if you're super, super bearish for the day and you see a bullish setup, your targets haven't changed, your analysis did not change. So if you trade against that, you're just an idiot, because you're just going against your bias. So, and try not to just make up ideas for why you're bullish. You know, if you're bearish, you're bearish. Don't just change up your bias for no reason. But yeah, then we just kept trading. We kept pulling down, and you can see we just didn't really have anything. Going back onto the 50-minute, you can see we've just fully traded all the way down through Asia low, through, you know, new week opening gap, through that 50-minute fair value gap, through the hourly fair value gap, and yeah, we just weren't able to catch anything on the way down. But yeah, the highlight of today was just good analysis, really good analysis, being able to kind of look at where the market wants to go, and it plays out exactly how we expected it to. Now we're probably just going to go take this New York low, but yeah, that's fine. I'm completely happy with that. Not able to take any trades today, that's fine. Again, we did see that 3-minute that was really good, that pre-market 3-minute, which would have been break even anyway. And then also this 1 minute here, which would have been nice. Let's see how it looks on the 2 minute. Yeah, no, that's just a 1 minute. It would have been nice if it played out. It didn't play out, didn't enter it either. Leaving 930 above, I'm happy I didn't take that trade, even if it did play out. So I'm not too mad at today at all. Really good for a Monday with no news. Obviously, that's mainly due to the new week opening gap. It's unfortunate. I like to usually take advantage of like massive draws like this, but it is what it is. So that's for today. So no trades taken, no money made, no money lost.